Hello everyone, welcome back to our Accounting 210. In this video, we continue with learning objective 5, prepare the financial statement. Last time we talked about service company, we talked about the merchandising company. So today we will focus on the manufacturing company. So let's get started. I think last time we are on page 3, right? So we said for service company it's straightforward because there is no inventory, so there is no cost of goods sold. If you look at their income statement, you can see their revenue minus the operating expense directly to get the operating income. For merchandising, they don't manufacture, but they purchase their inventory, right? And then they purchase the inventory, then they sell it to the customers. So they will have sales minus cost of goods sold, get gross profit minus the operating expense or the period cost, get the operating income. We said, how do they get the cost of goods sold? Basically, we used the example is at the beginning they had 3 eggs. They purchased 5 eggs from the egg farm, and so totally they can maximum number they can sell is 8 eggs. At the end, they found out that, oh, they still have 2 eggs sitting in their warehouse. So how many eggs they sold? They sold 6 eggs. We said the beginning plus purchase equals cost of goods available for sale minus ending inventory gives you cost of goods sold. So today, we finally go to the very mid part, the hard part of our chapter 2, your My Accounting Lab. The problem is directly related with this part. So pay attention and then do this part of question with me, okay? So let's look at this one. Said flow of costs through a manufacturing company. We want to find out, hey, how the cost flows in the manufacturing part. First is we separate all the costs to our product cost and then also to the operating expense, which is the period cost. And so all of the parts in the value chain except for the production will be the operating expense, right? We have R&D, design, marketing, distribution, customer service. So first we want to know what is product cost, what is period cost. And then period cost straightforward. We said it's just those things, they will be expensed immediately. So we focus on the product cost and how does the cost flow in the product part. How do you get your inventory? How do you produce your product? I ask you, you are the manager of the Toyota car company, and how do you produce a car? How do you produce a car? We said the car, to produce a car, you need to have direct material, you have to have direct labor, and then you also need to manufacture, to have manufacturing overhead, right? So the first part is we have to have our raw material. So we have to have our raw material. We purchase our raw material, and then we get our raw material inventory. So you get the plastic, you get the metal, you get everything, and then you have the raw material ready. Will the raw material become the car by itself? No, you cannot, unless you have a magic, right? Otherwise, you have to use what? You have to use direct labor. Someone has to, we talk about that, right? Convert the direct material to a car. And then we also need the manufacturing overhead. We need the utility, we need all the other costs to convert our raw material to the car, but we don't really get, and then we add our direct material, right? So we have the direct material, we have direct labor, we have manufacturing overhead. But it doesn't mean we will get all the cars, all the finished cars immediately. Some of them may first be there as the work in process. We cannot guarantee, hey, today we got the material, tomorrow, hey, a completed car is just there, ready to be sold. No, maybe tomorrow you just finish the 10%. The next day you follow another 10%. So we first, from the raw material, we use direct labor, we use manufacturing overhead, we got our work in process, okay? So we got in our working process. And then once we have our working process, that is our cost of goods manufactured. That is our cost of goods manufactured. We manufactured some goods, right? We manufactured, we haven't sold, we manufactured. And then if it's finished goods, it will become our finished goods inventory. It will become our finished goods inventory. And then when we sell them, when we sell our finished goods, it became cost of goods sold. It will become cost of goods sold. So this side is the income statement. We have been talking this many times. Your revenue minus our cost of goods sold gives you our gross profit minus all the operating expense gives us our operating income. But for the manufacturing part, it's not that easy to get cost of goods sold directly. We have to do 3 steps. As I always say, it's really dry if you just read this. So let's look at an example and some numbers. Okay, so for this one, we go all the way, right? So all the way we go, actually the step is we assume we got everything. So we prepare our income statement, and then I tell you how do you get this item, right? So our main focus is how do we get our cost of goods sold. So here we just assume you already got this number, and then we will get this number in the next slide. So you use your revenue minus cost of goods sold gives you gross profit minus operating expense gives you operating income. I want you to remember, I highlighted this number, our cost of goods sold is 40,000. So let's remember that number. How do we get cost of goods sold? We said it's not easy. You need to get our cost of goods manufactured, right? You need to first get cost of goods manufactured. How do we get that one? Is we start from all the way. You want to get cost of goods manufactured, you need to get the material, right? You need to get the raw material used. So we start from the very beginning, step 1. We started from step 1. Calculate the cost of direct material used. We calculated the direct material and how much is used for this product. So we can add our direct labor, we can add manufacturing overhead, we get the cost of this product. So we want to get our direct material used. Okay, how do we get direct material used? This is the same logic as merchandising firms. At the beginning, you have the raw material is 9,000. You purchased another 27,000 of new raw material. So now your material available for use, you totally can use $36,000. Did you use all of them? You didn't use all of them. You still have some ending inventory, right? So you still have some ending inventory, 22,000. So you totally used $14,000 of direct material. Beginning 9,000 plus the purchase equals the available to use 36,000. You still had some 22,000 as ending inventory. You subtracted there. You get the material used is $14,000. So remember this word, right? Remember this number. We used $14,000 for that specific product. Are we done? Not really, right? We still need to get our direct labor and the manufacturing overhead. So now we calculate, this is step 2, right? Step 2, we calculate what? We calculate the cost of goods manufactured. We calculate the cost of goods manufactured. So how do we do this? Remember, how do we get cost of goods manufactured? We need to have our raw material. We need to get the direct material used. We add direct labor. We add our manufacturing overhead to get the work in process and get the cost of goods manufactured. Okay, so let's look at this number. To get our cost of goods manufactured, also similar idea. You have a beginning, you plus that, you minus the ending, get cost of goods manufactured. But here we focus on what? We focus on work in process. We focus on work in process. At the beginning, we had a partially finished product, right? So we had our beginning work in process inventory. We had our beginning work in process inventory is 2,000. And then we need to add the new manufactured, right? We need to add what? We need to add manufacturing costs incurred, including direct material, direct labor, and then manufacturing overhead. We need to add those things. The question will tell you, hey, direct labor is 19,000, manufacturing overhead is 12,000. But you calculated direct material use is how much? 14,000. You said, hey, how did you get that number? How did you get that number? How did you get that number? You tell me, how did you get that number? Calculated it here, $14,000. So that's the calculation. How do we link it, right? We use our direct material used from the last step. Okay, so now we have a direct material used 14,000 from the previous step. Question will tell you direct labor, manufacturing overhead. So your beginning working process plus the manufacturing cost incurred gives you what? Gives you total manufacturing cost to account for. So you got the total manufacturing cost to account for is 47,000. Okay, are all of them finished goods? No, you still have some ending work in process. You still have some ending work in process. So cost of goods manufactured will be the cost of the cost to account for minus ending work in process. So your totally cost of goods manufactured in that period, you totally manufactured $42,000 of the product. Okay. Remember, you promised me, you remember this word is 42,000. We totally manufactured $42,000 product. Are we done? Yes or no? Almost the last one. So finally, we do the last step to get the cost of goods sold. How do we do that? We still use beginning plus the whatever minus ending, that cost of goods sold finally. But now we focus on finished goods. We focus on finished goods. At the beginning, we had finished goods of 6,000. We have the manufactured. How do you get the number? You tell me one more time. How do you get this 42,000? You tell me. I'm waiting for your answer. You said, oh, I remember 42,000, right? 42,000. 42,000, right? 42,000 here. Yes, exactly. You calculate the cost of goods manufactured is 42,000. So your totally cost of goods available for sale, cost of goods available for sale will be how much? 48,000. Did you sell all of them? You have to minus your ending inventory, 8,000. So totally you sold how much? 40,000. Hey, look at this number. 40,000. Why I want you to look at this number? 40,000. How do we use it? Hey, how do we use it, right? Remember, cost of goods sold, $40,000. Oh, you look at this. Oh, I want to hear you. Oh, right. Are you, oh, yes or no? So you got cost of goods sold, and then you prepare your income statement. One more time, how do we get our income statement for manufacturing firm? So first, we need to focus on raw material. We have a beginning, we plus purchase, we get available to use, we get raw material use. Okay, so this is the first step. You get your raw material use. Second is you get the cost of goods manufactured. So we focus on work in process. We had a beginning, we add three things, right? Direct material, direct labor, manufacturing overhead. We got the total manufacturing cost to account for. We minus any work in process, we got cost of goods manufactured. And finally, we focus on finished goods. And then we do our step 3. We got the cost of goods sold. Beginning plus manufactured, available for sale, minus ending gives you cost of goods sold. You got this one, and then finally, you can do your income statement. Step 4 is you do your income statement. Now I want to review this thing one more time with you. You focus on raw material, you get your material used, you add direct labor, you add manufacturing overhead, you focus on working process, you get cost of goods manufactured. And then you focus on finished goods, and you get cost of goods sold. You prepare your income statement after that. Okay, so you will have a problem to practice, and you have a multiple choice format. So let me know if you have any question after all the assignment and after the quiz. Last thing I want to say is we don't just compare the income statement. We don't forget we also have balance sheet, right? So we focus basically, we said is how inventory is presented in the balance sheet. Service company, we said no inventory, right? No inventory. Merchandise is just the merchandising inventory. And the manufacturing company, they have raw material, they have working process, they have finished goods inventory. So they have 3 types of the inventory in their balance sheet. As I said, learning objective 6, we don't worry too much. We have one chapter, chapter 8, to talk about the relevant information. So next time, we are almost done. Remember, right? We are on slide 32. We just have 38 slides. So see you next time. And then I think we will finish all these PowerPoints in next video. Talk about learning objective 7. Let me know if you have any question. I'll see you next time.